Hey, strategic wealth preservation investors. It's Chris Vermeulen from thetechnicaltraders.com. I want to give you the quarterly report, my technical take on precious metals, mostly gold and silver. So let's jump over to the charts here and take a look at what gold, silver, and the dollar are doing. Now, all these are kind of play together, they move together, and we've got some pretty interesting major trends. Now, this is the the monthly chart of gold. And what we've seen here, we've had a massive super cycle to the upside, then we went to a multi-year bear market or decline and consolidation. And in 2019, we started a new super cycle to the upside. And we have now pulling back and we're threatening to break down and have a deeper correction. Now, a couple of things here to touch on. Now, overall in 2019, I feel as though the market started a new super cycle that could last 10 or 12 years to the upside. It was a very similar setup that we saw in 2001, 2002, and we went into a massive decade-long rally. Now, along the way, we had a bear market in the stock market, in the economy, and we saw gold correct 34%. Well, I think we've started the next super cycle, and from the recent highs down to where we are, we've corrected about 22%. Now, what's interesting is if this level is broken, which I think it could be over the next several months, we could see it correct all the way down to roughly this area down here, which if I was to just draw a line, this is a very significant support level from a technical standpoint on the charts, where it's also the height of this volatility from the high down to this neckline or this low. You flip it to the downside, it's about a 34% correction. So we'd be potentially kind of mimicking that of what we saw in 2008 when we went into a stock market economic bear market. And we saw gold get pulled down, and then it took off. And gold and silver were the leaders. They were the first ones to bottom before the stock market, and it ripped to the upside. And I think we could do something very similar to that. So, while I'm not trying to be crazy bearish here and scare anybody, I do think there's potential for a deeper correction. Now, based on a monthly chart, we actually closed last month below the support level, which was the 1674. We closed below that level, and this is a monthly chart. And this month, we're getting a very strong bounce. Now, I think this is more of a technical bounce. We also have a lot of hype in the market right now of everybody trying to create a short squeeze, buying everything they can. There's a lot of hype. So it's driving the precious metals market up in silver and gold and in the miners right now. But I do think it is a kind of a news-based, support-driven bounce that I think will eventually fail. We need to be aware that, if you're a long-term in precious metals investor, accumulating at major support levels like this is a good opportunity. Also, if it was to break down and get down to this level, to me, that would be the ultimate opportunity, because if the US stock market does go into a full-on kind of recession and bear market like we saw in 2008, gold will be trading at a nice discount. It'll be a great opportunity, and it'll more or less mimic that same type of correction we saw in gold, in silver. So I think this is a good level for the market to try to find stability. I do think from a technical standpoint, it is struggling because this bounce that we're seeing is nothing more than a news-based technical bounce. The trend is actually still down, and we could drop down to that $1,300, $1,400 per ounce level for gold. So just be aware of that. If we look at the daily chart, or let's go to the weekly chart of gold real quick, and I'll just show you more so what I mean here. If we look at the daily chart of gold, this is the blue line, but we have a series of lower highs and we have a series of lower lows. That is the definition of a downtrend. We've tested support. We had a bounce on the weekly chart several months ago. We've come down. We closed below it twice on the weekly chart, and now it's having a bounce, which is just an oversold bounce, and it's very much so news driven, and a lot of things coming into play with the dollar falling. But really, we're starting to get back up into an area we're under the moving averages that this could easily get sold into and continue to go lower. So I know a lot of people are getting very excited, thinking this is the start of something huge, and maybe it is. But the big picture here is actually still, to me, lower prices for precious metals over the next several months. I think 2023 is actually when we're going to see precious metals put in a major bottom and then start that next super cycle rally that could last many, many years, where we see gold 2,600, 3,600 and beyond going forward. And that means that we're probably going to see the dollar top out as well. So let's take a quick look at the dollar real quick. We'll go to the monthly chart of the dollar. And if we take a look here, let's go way back in time. You can see we're climbing up into this previous high, 2001, where it got last time when gold started the next super cycle to the upside. And so I still think, even though the dollar's had a sharp pullback in the last week and a half, I do think in the grand scheme of things, this is nothing more than a pause and a pullback in the dollar. And the dollar is going to keep going up as the U.S. stock market continues to unwind and sell off. People will liquidate, move to cash, and potentially move into the U.S. dollar index as a safe haven play. Eventually, we're going to see the dollar top out. And when it starts a new downtrend, I think that's when we start the next major move in precious metals. So, I mean, we've been waiting for the precious metal sector to really break out and start that mega super run for many years. Every year we get a little bit closer to it. And I still think it's still 8, 10, 12 months away before we really confirm the next major rally for precious metals. So let's take a quick look over at what silver is doing. If we look at silver, it's broken down a lot more so than gold. It led gold to the downside. Gold had equivalent breakdown line, which it's testing right now, which is right here. Silver already busted through that, has sold off, and now it's having a bounce back up into resistance. A lot of people are getting very excited about silver here. Just keep in mind, it's coming up to resistance. A lot of this move here is based on a lot of hype of the short squeeze. We've got a series of lower highs, depending where you want to draw these lines, series of lower lows. And this is going to act as a pretty major resistance area. So this could very easily fizzle out. And we see that final big drop while the stock market collapses. It pulls everything down with it temporarily. And that could be the ultimate opportunity for precious metals. So while this is probably the opposite view you're hearing from everyone else who are super bullish on the sector, from a technical standpoint, the trends are still down for precious metals. The super cycle trend is bullish, but there can be very big 34% corrections along the way. And I think we're still in one of those big correction phases before we start the next rally. So be aware that silver is moving up into resistance, and the move has been mostly based on a lot of news, a lot of emotional traders piling in, trying to make quick money on a hype type of scenario here. And it usually doesn't end very well. So in the grand scheme of things, I am very bullish on precious metals, but probably not till 2023. We could potentially see them hitting lower pricing here. And I think it'll be an incredible opportunity, because right now everyone seems to be piling into precious metals. You can't get the physical. That's generally not so much the phase where we see it just take off. If everybody's already buying it and you can't get it, really what we want is for this next final washout, bear market in equities, the U.S. economy to start to bottom out, and everyone gives up on precious metals because they're down so much. And that will be the opportunity to stack the physical. That's when you can accumulate this insurance policy on metals, which is how I see it as an asset going forward for the long-term growth. Anyways, if we take a look at what silver did the last time, in 2008, it had a huge flush out drop. And that's what I'm looking for here, is some big flush down, 16, 13, 12, somewhere. And then you can see what happens after that. Silver put in a massive move to the upside, rallying almost 500% to the upside. So while my short-term view is bearish or to neutral at best, the long-term view after this new platform builds a base and starts to go up, there's a lot of upside potential. If silver can move 500%, think how much the miners can move if you're into trading the leverage side of the physical as well. So there's lots of upside potential there going forward in the markets. And to touch on one more thing, now if we take a look at this is the NASDAQ daily chart. Both of these are the chart here. Now, On the left-hand side is our trading strategy with our consistent growth strategy. When the bars are green, this is when we get into trades. We trade the hottest sectors going forward and the indexes. And then when they roll over, we close out our positions. Sometimes we hit targets along the way, but we recently, got into a wave of the hottest sectors and the indexes. It rolled over. We moved into the dollar while the stock market fell. And just knowing if the stock market is in a technical uptrend or downtrend will allow you to dodge a lot of bullets and save yourself a lot of time, money, and stress. Now, what's really interesting here is on the right-hand side is our market sentiment tool. And the way this works is when the stock market from a technical standpoint is red and trending down, we get into a falling market, and it has a great way of sucking market participants in. And all this links back to the bounce that we're seeing in precious metals right now. So bear with me for just a moment here. But if you take a look at these bounces in the market, we have seen some of the strongest knee-jerk reaction rallies happen in a downtrend. And these happen over and over again in the markets. And we had one just about a month and a half ago. And I've been talking with subscribers saying, hey, we're looking for another, 6-7% rally, maybe even a 12% bounce in this stock market any day here. And what's interesting, and it's tough to see on this chart, but there's a big, deep green bar in here. And when the bars go green or orange, that's telling us that the market sentiment, this is our sentiment chart telling us what investors are thinking or feeling and doing with their money. And when we get a green bar, that tells us everyone has just turned very bullish. And the market has this super strong rally. In 2 days, it moves almost 7%. It makes everybody turn bullish. You get a green bar. And when everybody's now doing the same thing, buying, the market rolls over and sells off, and you get a huge collapse. We had another green bar over here, big rally, 7+%. Everyone gets bullish thinking, oh, this is the bottom. And they get in, and then the market falls. Over here, we had it sideways for about a week and a half. Everyone was bullish, thinking this was the bottom. And then, it caught even more people, and it drops even faster and harder. We had the same over here. After a 10% rally, people got bullish, and then they got hit. Same over here. And then we actually had a strong trend here. This is a trade we played. We trade a lot of different sectors. We played the indexes for some nice gains. When we had to sell signal, the only sector or asset that was moving up was the UUP, US dollar ETF. As the stock market fell, our US dollar play went higher. Eventually, we got out of that. And then you can see over here, we had the stock market put in a very strong bounce, 7%. We had a green bar. Everybody gets bullish, and then they get left behind. And this is what I've been talking with subscribers over the past 5 or 6 days, saying, hey, listen, we are going to get a rip your face off knee-jerk reaction bounce, anywhere from 7 to probably 12% over the next few days. And don't get sucked into it. We're actually looking for some green bars to show up here. And that usually means we're going to break down and go lower. Now, how this plays into the precious metals market, this is for gold, silver, and the miners, is that whatever sectors are holding up best when the stock market is going down, which is what we've seen in the past several weeks, they typically are the first ones to rally. They're also usually the biggest movers. And we have seen that. We've seen where the stock market has moved down during these last several sessions. We've seen gold and silver miners move up. And of course, now they're having the biggest gains while the stock market is rallying here. They're also posting some of the biggest gains. So they're top of our best asset now leaderboard. If we were to look at which sectors are the top performers to get in, if you were to actively trade, it's silver miners, gold miners, energy miners. We've got base metal miners right over here as well. They're all performing very well. And what's nice is if the miners are leading, we tend to see the physical metals do well and follow suit. So just to kind of wrap this all up from a long-term perspective, I still think we're seeing precious metals go lower for several more months. From a short-term perspective, the stock market is bouncing. It's lifting all tides, all sectors and assets right now because everything is oversold. Be aware this is a bounce at this point, not a long-term position, in my opinion, and it should be traded. And any gains you make should be protected, moving your stop up, taking partial profits, all of those things going forward. So long-term view, I think we're going to see gold do very well in a super cycle standpoint going forward several years. but I don't think it's going to bottom this year. And I think there'll be a great opportunity to keep adding as precious metals fall in favor here for a little while more. Anyways, that's it for now. I'm Chris Vermeulen from thetechnicaltraders.com, and that's it for now.